it'd be nice to have some audio. There we go. Now we got some audio. All right. So we want to take a look at what's going on here with there we go, with the sell-off we have right now in the ES. So what do we do with something like this? The bell hasn't rung. Now remember, futures are trading nearly 23 hours a day. And so we're going to get this running start in the S&P. And right now it's sitting in the daily price movement range of the daily time frame in the 1 hour. So this would be what we would consider a buy the dip based on volatility within the context of a trend. So keep in mind, if you're trading short term, 5-minute time frame, 1-minute time frame, 10-minute time frame, whatever it may be, the view you have at the open intraday versus the view you have on the daily, that's the difference between time frames and time horizons. So we can be bearish when we're taking a look at the 5-minute. I'm bearish because right now, short term, because right now we're trading below the previous session close at 57.15 and a half. You take a look at the NASDAQ, what's it doing? Again, pulling back. If you're a big fan of the 21, here we are. 21's overlapping with the volatility zone. These are pullbacks within the context of a trend. But one thing we do know, and I did the video last night, the free video over at the Simpler Trading YouTube channel on the Dow and the Russell. And those have really seen key sectors weighted within those indices surge really strongly in this beginning of Q3, the beginning of July. And ultimately what we have is the financials, XLF, and regional banks, KRE. Now, these are the heaviest, most influential sectors in the Dow and in the Russell, respectively. So if these are on the move, it's going to influence that index. And you can absolutely see the breakout above 42.50 and XLF, the Q3 strength in regional banks has really been a boost to those indices that frankly have far, far, far lagged the strength that we have seen thus far halfway through the year in the S&P and the NAS. Now, does this mean it's rotation? I get this question a lot. Do we have to see weakness in the NAS to see strength in the Dow? Not necessarily, but remember, if someone's not interested in buying something, it's generally going to start to do what? Well, buyers are support, buyers are demand. And if we don't have a lot of demand, they have a tendency of floating around within the context of that trend. Important to note that the Dow, as of last Friday, joined the trending party that's already been going on for a while, in the S&P and the NASDAQ. And the Russell has yet really to organize into that uptrend. Remember, 4 or 5 days of going straight up after a prolonged period of consolidation doesn't that quickly create a trend, but it is important to realize that KRE is in a trend. So it's fairly inevitable that if KRE can hold this bullish structure, that it's going to take the Russell with it, right? But remember, the Russell is 2,000 stocks, not high concentration weighted. So it's got a different nature in terms of movement as opposed to Dow, S&P, and NASDAQ that are really moving based on maybe 5 to 10 stocks, right? That's what high concentration weighting has done to modern markets. The more that certain names are more heavily weighted as opposed to the others in that sector or the others in that index, it actually renders those other stocks much less influential. So what they no longer have in terms of percentage influence, they've got to make up with actual price movement. So a low-weighted stock during earnings season can be really interesting because if it has a disproportionate price movement, it'll have then that influence on the sector or on the index. But barring that, it's really not going to be all that influential. So keep an eye on what moves the market. It's really easy. Look at the stock weightings, look at the sector weightings, and you'll be in good shape. All right, so that is what we've got in Dow and Russell, and we'll continue to look for more strength there. All right, so here we go. Let's take a peek then at what's going on in the bond market and in gold. Now, with the Federal Reserve likely to cut in September by 1/4 point, it's 90+% baked into the cake, we should continue to see support in bonds and in gold. And you can see with that September adjustment, we went from a maybe to a heck yeah on that September rate cut. And you can see, take a peek just in the last couple of days, which actually does mirror what happened in those rate cut expectations, gold is launched higher. So why is gold wake up? Why did gold wake up? Well, first of all, it was heavy and sideways for a while. And then as the expectation for September cuts got more and more likely, started crossing not only being probable, but now fully discounted, gold is free to run. And that's exactly what you're seeing there. So this is where the macro does matter. And I don't mean the macro of that's not news, earnings, fundamentals. That is not macro. Macro is really, what does the Federal Reserve think? Let's be real. That's what macro really is, macroeconomics. But their macro messaging is tethered to inflation dropping to cut rates and jobs not being obliterated by the higher for longer rate scenario that we're in. We're sitting in July when Q3, Q4, even Q1 of this year, expectations were for cuts at least by May, maybe even by March. So as we push this further into the year, the expectation is still there. And that's why you've got the S&P and the NASDAQ in uptrends, anticipation of rate cuts, right? And even the early start of the rate cuts is not bearish, right? Towards the latter end, as we're winding down this dovish rate cutting cycle, that's when the market has to then stand on its own volition of, hey, aside from cheap money, aside from lower yields, why would we continue to buy, right? So the anticipation is really where the expectation is really where those trends will form. And that's where some of the cleanest trends will be. And by the way, it's no different for earnings. You know, do I want to play the actual earnings release? Not at all. But the 2 to 6 weeks preceding earnings, the anticipation of is oftentimes, again, going to be where the best trades are set up. So if you're wondering, Rog, are you telling us we're just betting on trading, right? I love that Forex trades are called bets because they are, right? Are we just betting on something happening in the future? Almost always. That's why we see movement in, frankly, any market. It doesn't matter if it's a stock sector or index. All right, so let's get to the questions. As always, we've got kicking off. SPY, QQQ are trending on the daily. So yes, Philip, I'll look at the ES and NQ, but yes, choose your own adventure. The ETFs are going to track with the futures, and they are indeed trending. What might be a good entry for swing on both? I'm going to focus on those daily price movement ranges that I was mentioning earlier. I don't want to necessarily do it right at the open, but it is there. So for traders who trade futures, of course, you can look at the September contract, the micro or the mini. If you aren't a futures trader, but you're watching the futures as we do in the mastery, then you can say, look, if the ES is sinking down into a range of support, I can buy SPY calls or QQQ calls or even an outperforming stock within those indices. Remember, we don't have to go with the index. We can go with an outperforming sector ETF or even the outperforming stocks that are weighted in the sector or the index. So yeah, I'm definitely thinking that it's time to look at some of those pullbacks as building a long position once again. All right, NVR. Do I think real estate stocks have legs? I don't know about NVR itself, but if I take a look at, for example, the ITB or the XHB, both of which have really been quite strong the last week or so, because remember, as the rate cut expectations are baked in, if we can see better building starts and building permits and housing start numbers, both of which are released this week, we can start to see more strength. The best look in ITB, and I'm just looking at another screen here, the best look in ITB, well, I mean, DHI is moving higher, Lennar is moving higher, NBR, Home Depot, Sherwin-Williams, yeah, so those all have a lot of bullish momentum and they're trading above the 200. So there's a lot of choices. I don't know, we have to stick with NVR, but look at some of the other names, John, including NVR in the ITB. NVR is just ridiculously expensive, right? It's an $8,500 stock. So, you know, that may not be necessarily the most affordable, scalable name for a lot of traders, but Sherwin-Williams, 300 change dollar stock, Lennar at $1.70, DHI. And remember, the cost of the option is oftentimes going to be tethered to a certain degree, of course, based on volatility and proximity to earnings, but also the underlying value of that stock, right? So definitely some names to keep an eye on in ITB. And by the way, for those of you that are subscribers to the Top Tier Outlook or my Sector Secrets Mastery members who have access to that included with their membership, We have ITB. If you looked at our sector discussion, ITB is a top 5 name now, and it has surged really, really well into July. And for all the reasons that we just discussed, for sure. All right, I'm in SBX calls. Okay. Well, let's take a look at the structure here. SBX. I don't know why it's not pulling up. This is a stock, right? It's not pulling up for me. Let me try it on SBX. There we go. A month out. What are my thoughts? Well, you've got a month for one of two things to happen. Either price settles down to the, and when you're looking at a stock, Alan, that is below $10, it's not even a price conversation. It's really a volume conversation. So what's in your way? If we just look back to April, the previous quarter, you've got a lot of work to do to get through, say, 8.25. After that, 9.25. Those are the obstacles to the upside. As far as support goes, you can see support at 7.5 and $7.10. Okay. All right. Oh, you're looking at BSX. Okay. Overall uptrend. Yeah, Boston Scientific. Overall uptrend. Been very strong all year. By the dip, mean reversions. They're not going to be frequent, but I'll give you an idea. Throughout the year, throughout this uptrend, take a look. Middle of March, mean reversion. Middle of April, mean reversion. And we just had one, and we've been flirting with that mean reversion again since July 2 to about July 10. So on those pullbacks, that mean reversion, which is the green, yellow, red lines on my chart, yeah, those would be the mean reversion. I would keep an eye. Am I going to buy at a higher high? Oh gosh, no. But gorgeous trend, Alan. Yeah, really, really, really gorgeous trend. Philip, you are most welcome. Yeah, so it's kind of a funny story. So Raghee, right? It's actually, my mom pronounces it Raghee, right? So Indian lips. So it actually means Queen of Queens, not just queen, but Queen of Queens. I know, I was saddled with a lot at birth. So thanks, Philip. All right, let's take a look at, yeah, absolutely, Alan. So, gorgeous uptrend, buy for sure the dip. What does that mean? Buy the dip means A, do we have a trend? And B, where would the support be in a trend? Now, if we add a little bit more texture to it and we take a look at some Darvis levels, I think a pullback even to 75, 80, that area would be very good as well. We've got some Darvis support there. It's in a range. So would we expect a momentum breakout to the upside after a period of consolidation? Absolutely. When a trend loses its trend, it doesn't mean it's a downtrend. So when an uptrend loses its trend, it doesn't mean it's a downtrend. It simply means it's bullish congestion or bullish consolidation, depending on how wide the range is. But nonetheless, it's still bullish. So one way we can think about this is always continuation is more likely than a reversal. You get a lot of traders when they see a trend break, they're thinking, oh, that's it. That's the beginning of the end. If it starts to trade lower, now it's time to get short. Oftentimes they're going to get sucker punched, right? Because in the context of an established trend, one even as good as BSX, especially one as good as BSX, the probability is more continuation. Maybe not to the degree that we saw already this year. But again, I will always err, if you will, on the side of continuation when a market has been moving higher and then consolidates. It's a little thing we call respect the trend that was, right? And we did lose the trend in BSX, but does that mean I'm bearish? Hardly. Take a look at the color of the candles. They're green mostly, right? Those are bullish candles. Not just up green traditional Japanese candlesticks, but they're gauging participation and they're gauging price. Where is price in relation to basically being bullish or bearish? And at worst, all year long, we've seen some neutral. So if someone said, hey, we've been bullish and we're neutral now, would you think bearish? I don't think anyone here would, right? You think, well, I may not want to engage, or right? Continuation is the probability. So good stuff there. All right, let's move on to take a look at that Russell and the Dow this morning. Both are trading below the previous session close on the intraday 5-minute, but both are really closing in. Well, at least the Russell's really closing in to the daily price movement range. So micro Russell, mini Russell, IWM calls will be absolutely something on tap, especially if KRE is looking a lot like the Russell, where it's strong, maybe pulling back, or if it's just strong, that would be great confirmation. And even if the Russell pulls back, maybe it's some profit taking, the continuation is much more likely. Take a look at the Dow here. Again, if we can get a little bit lower than we are now, actually maybe a lot a bit lower. I won't even think about a Dow swing until about 40,900. Dow had an unbelievable day yesterday. It made for some really good day trading. But if you're a swing trader, when the momentum is carrying price away from that zone of support, I'm not going to chase it higher. You know, how many folks are going to chase this thing up into the high, presuming that it's going to keep going? That's what we don't want to do. We want to find something that has the likelihood of continuing to the upside, but buy it when it pulls back. And that's not counter trend, right? So some people say, Rug, is that a counter trend entry? A counter trend entry would be shorts. A counter trend entry would be long puts, right? But buying a pullback of an uptrend is very much a trend following entry. But rather than doing it as it breaks momentum, we do it as it sinks into support. That's the difference between exhaustion traders buying at support and momentum traders buying through resistance. But the cool thing is, within the context of a trend, both are likely going to be fine. It's just a matter of which one is your pitch, right? Which one can you manage risk from? Which one has a much more scalable entry for your account? And I'm an exhaustion trader. Give me a trend. Give me a reversal, not reversal, retracement, a correction, a pullback, a mean reversion, whatever you want to call it. Give me a trend. Give me that little bit of weakness that I can buy into, and I'll engage it to the upside, because that's the probability, right? The probability of continuation. All right. Any other questions? If not, we're going to jump on over into the Sector Secrets Mastery. If you did not check out the free video where I did a deep dive into why the heck is the Dow up? Why is the Russell up? The why does matter, because the why will tell us if the Dow and the Russell, if you want to imagine their engines or a motor, are the cylinders within it firing, right? And which ones are they? And why do they matter? Do they all matter equally? Usually not. But which ones matter more? And with the XLF breakout on what seems to be overall pretty good earnings as we're kicking off this earnings season, no reason that the Dow should not benefit, as finally financials have found their way through some key resistance levels, initially through about 4180, and then most importantly through 4250. All right. Okay. So last symbol of the morning, NVIDIA. All right. So this is always an interesting conversation. Any stock that's had an epic run, and this doesn't matter if it's NVIDIA or SMCI or any of those names that have had really epic runs, we have to trade it for what it is now, not what it was, presuming that it might have another, magnificent run. Right now, NVIDIA is not trending within the semiconductors. It's actually not one of the leading names in semiconductors. It's the heaviest weighted, right? It's the heaviest weighted, but it is not necessarily leading. What are the trends in SMH right now? Taiwan Semi, ASML, AMAT, LRCX, and Intel. So while I like this group, and NVIDIA certainly would be worthy of a buy, if I'm going to prioritize strength, I'm going to look at what's happening now, what stocks are in uptrend now, not necessarily trying to say, hey, maybe NVIDIA has another run like it did January through March or May through June as the split was anticipated. So I don't mind NVIDIA. It's going to be important to semiconductors on a whole, but I would focus on those other stocks because those are the ones that right now are trending higher. All right. Thanks as always, gang. Hope you all are going to manage risk today. Be opportunistic. Heads up. Those pullbacks are when the panic narratives start to really gain steam. But if we're in the context of a trend, oftentimes these are going to be some of the best entries. So we still have a lot of Fed speakers this week as well. A little bit of data. We have the ECB tomorrow. But for the most part, we are still and seeing broader participation to the upside in stocks. Be good to each other, gang. I'll see you tomorrow.